speaking of consumer staples, investors really don't seem to care that much about valuations right now.
Well, no, and if you look at some of the stocks, you talk about Walmart in particular, Walmart, Target, et cetera, they're the ones who are the big winners in COVID. And I think what's drawing investors more than anything else is the fact that these retailers and some other in the technology industry, I'll make that a parallel, not only have had an opportunity to stay open and grow their businesses, but they are doing so in a way, Sully, where I think they're going to keep clients permanently. They've had an amazing opportunity to show what they can do through customer service, delivery, etc. And because of that, I think as an investor, you're saying, okay, longer term, who are the stocks that are not only doing well, but have an opportunity to continue to do well no matter what happens in terms of the opening? And so that's drawing clients in. So, this is one where you're truly trading off future valuations and the fact that business can expand even after we reopen, which, I think some of the fears for some people is they won't be able to keep clients. I don't see a reason why many of these retailers can't.
Yeah, it feels like it's going to be the ones, who succeed, and then everybody else kind of goes away. And it's unfortunate for so many millions or hundreds of thousands of small businesses across America. I guess that's a different segment, a different argument, though, JJ. Back to the equity markets here. The S&P 500 likely to hit a new record, if not today, in a couple of days. Then, does it mean anything other than making a nice headline? Is there any technical or chart significance to it?
Well, I think you brought up a great point. You look at the valuations, and I think people are like, there is absolutely no way that this is sustainable or no way that this should be happening. A couple of things along those lines. On the surface, you may think that. But I also think you have to look at this. People don't have a great choice with their money right now. It's why quality stocks can continue to do well. 70 basis points, I don't think it's exciting anybody. And yes, it's a much more conservative route to go put, your money into bonds, etc. But as our population grows older, people are looking for return. They've had a number of years now of low interest rates. And as many people near retirement, I think what they're saying is, I would much rather put my money in an equity that has a chance for capital appreciation, that even if the dividend isn't traditionally great, if you're paying a 1% dividend, you're still beating the 10-year. And with that, again, quality stocks, I think, have drawn people more than ever because they just don't have great alternatives with their money.
And isn't that amazing, JJ? Because for years, and you and I probably talked about it. We've been talking together 20 years. The bear argument was, well, the baby boomers are going to sell all their stocks, and that's going to be it for the equity market. I know a lot of people in their 70s and 80s, my parents and others, and their advisors, they just keep pushing them into equities. Baby boomers are not selling stocks. They're probably buying them.
And if you think about your parents in their 70s, the traditional was, okay, at that age, 100 minus your age. So your parents traditionally, if we're talking, when you and I first started talking 20 years ago, if your parents were 70 then, they would have been 30% equity, 70% bonds. I'm going to guess that's not the mix they have now. They're probably closer to 50-50 or maybe even more slightly toward equities because the bond market just isn't giving them the type of return they need in order to continue to live.